Hi everyone, I'm Ken from CryptoTradingKS. We're going to look through the crypto market for opportunities when we can see 0x in DeFi is doing quite well. Sushi's come up nearly 20%. XRP is continuing to shine. In blockchain infrastructure, Airwave is doing quite well. Also, Sia Coin. The graph, unfortunately, has been hit pretty hard. The meme coins are slightly down. Blockchain services have been really interesting of late, but we're seeing retracement, especially in the leader Render, AGIX and Fetch AI are down. WorldCoin is doing quite well, up a little over 5%, and VRA up 6.37%. When looking at the socials, SNT status is doing very well. DShop is up quite significantly. Viberate is up VIB, and AS Monaco Fan Token is doing well. In GameFi, SLP Smooth Love Potion is doing really well, up over 16.5%. The NFT side of the market has retraced quite substantially, nothing really cooking in NFTs at the moment. In the chain segment of the market, Solana has continued to do really well. Atom is also up. Cosmos Hub 3.89%, Ethereum Classic ETC is doing well, and Toncoin also doing well. We can see Rune and Conflux also doing pretty well. The crypto market, like all market, tends to move in terms of groups. For example, recently blockchain services were fairly hot and they're starting to cool down. But we know price is always moving in a wave. I'd like to give a shout out to our beloved global family. I appreciate you all so very much. Every day I look forward to seeing your comments and interacting with you. You're just an amazing group of people. Looking across the crypto market in the past 7 days for the top 8, we can see the percentages are not that great except for Solana. Solana has done really well. Over the past 24 hours, the two standouts are Solana and XRP. The greatest gainers in the past 24 hours, TIA, Celestia, that's a new listing on Binance. New listings tend to do things like this and they tend to drop quite a bit. We've also seen this on so many tokens. It doesn't mean TIA is going to do that, but it does give it a good chance. A lot of people have been burnt on things like ICP and WorldCoin. When they list, they tend to spike up really severely and then decay over time. Just something to keep in mind. Ton, another one of the greatest 24-hour gainers. XDC, Rune, Conflux, Solana, BitTorrent New, and Ethereum Classic, with XRP just making it in there. The greatest losers, top 100 past 24 hours. The Graph, Mina, Axie, ETH, DYDX, Render, Gala, Woo, Sand, and IOTA. Recently, we've seen Render do very well, and Axie Infinity, Mana and Sand also do well, but price is always moving in a wave. The secret with trading and investing, get on the right side of the percentage. Turning to 24-hour liquidations, we can see about 65% of total liquidations, around 100 million, were long liquidations. What does that mean? When a long gets liquidated, they push prices down. They're forced to sell at any price, and we can see those in these green areas. The reds are short liquidations, and we can see short liquidations occurring across XRP and Solana. Gas has been doing quite well recently as well. It's good to get a bit of a concept, an idea on where the different liquidations are occurring. Especially if you have long liquidations, they'll be pushing price down. And we can see over the last 12 hours, Gas, XRP, WorldCoin, Sushi, TIA, and TIA is quite small. Just bear that in mind. When you have a really small crypto or a really small stock, it doesn't really matter. It can really pump up in price and it can decay because it doesn't have substantial volume. Let's have a look at the past 4 hours. Wow, a lot of short liquidations. What about the past hour? Yeah, a lot of short liquidations. It looks like the market is starting to turn around. But we'll only really know how the market can perform when we look at the CTKS structure on Bitcoin. We need to compare that across to total and to get an understanding of the Tier 1, Tier 2 and Tier 3 charts. If you're liking the content so far, please smash that like button, and if you go into the About page on the YouTube channel, you'll see that I only do certain things. If somebody contacts you, a scammer contacts you for something outside of all of this, they want to take your money, and the scammers are getting really active. They impersonate all social media people, so please be aware. The main markets are experiencing fear, and if we look, just a couple of days ago, it was extreme fear. When the markets are fearful, what that basically means, people are selling, people are bailing on the markets. Why does that occur? Because of continued downside, negative price momentum. But at points of extreme fear, that's often the absolute safest time to get in, especially if you're a trader wanting and seeking to go long. And if you're an investor and you're dollar cost averaging, they are terrific times. If we go back to around the extreme fear rating March the 13th, that was a perfect time to get into the market. But most people are running from the market. Everybody wants to buy the bottom, but no one's there except professionals when the bottom is actually made. This unfortunately is because of fear. Fear is your worst enemy in trading and investing. Replacing fear with courage is critically important, and you can only get courage from experience. Start small and scale. You must know what you're doing at all times. A lot of people want to go fast, and when they go fast, they actually go slow. They go backwards. You need to take everything step by step. One of the best steps that you can ever make is the understanding that there are different powers of charts. The Tier 1 charts control financial markets globally. The Tier 2 give us an insight into the Tier 1s, and the Tier 3s an insight into the Tier 1s and Tier 2s. Typically, what happens when people get into financial markets, if they're trading off a component in the NASDAQ, for example, Apple or Microsoft, Amazon, Google, Nvidia, they'll just look at those specific charts that they've put money into. They'll pay very little attention to the major indices. This is a really big mistake. The indices give you the overall health of the market. You can also think that there are two major groups inside financial markets. One is the retail group or fear-driven group, and the other is the knowledge-driven group, those that run the numbers. The knowledge-driven group understands the difference between all the tiered charts. Knowledgeable participants inside financial markets are always looking for CTKS structure. They need to know where smart money is buying and selling. And when we look at the S&P 500, we've seen a fantastic recovery. We've had that bit of a retest and a resumption in through this structural resistance level. That's vitally important. What we see is the SPX, the S&P 500, trading currently at 41.89. It's getting really close to popping out of this structural resistance area from 41.61 to 41.92. We came down and just tapped the lower structural support area. This was at a time when everybody was literally fleeing the markets. Well, retail, fear-based thinkers were fleeing the market, but we weren't. We knew where the CTKS structure was, and the structure is a little bit different from your normal support and resistance lines. Well, it's incredibly different. It accounts for 55,800 plus days worth of data. These are the real support and resistance bands and levels inside the market. And what we're seeing is positive momentum inside the major index, the one that controls it all, the SPX. That's incredibly good news. If we continue this positive momentum and get on the other side of this resistance, turn it back to support and resume up, that is absolutely and utterly phenomenal. That would indicate that we've reached a bottom. Could be temporary, we may get more negative downside action, but the concept is if we do, we'll know it's coming because we know where the support and resistance levels are. When looking at the NASDAQ, we can already see as we zoom in, the price has been recovering. But to understand how significant this is, we need to look at CTKS structure. For example, at the current time, we see that we're making a series of higher lows. This is a low, this is a low, but this low is higher than that low, and it's continuing up. We're also looking for a bit of a breakout here. The NASDAQ could move up fairly substantially, but we need to know where the structure is across this 18,500 days. Not a month, not a year, 18,500 days is what professionals look at. And what do we see here? When price was coming down, when the NASDAQ was coming down, it flowed through a fresh air gap, got caught on structural levels, and then made its way down. These act as safety nets. A particular price level won't necessarily stop price and just simply rebound it if there's too much momentum above it. You need to come through to multiple safety nets, and you can see how price is getting caught at each one of these levels. Now we're entering a positive fresh air gap. That means that the NASDAQ could move up very, very quickly and challenge this upper boundary around that 13,100 mark. The NASDAQ is currently 12,841. This also supports what's happening on the SPX. What does this actually mean for you? If you're trading a component of the S&P 500 or the NASDAQ, you're looking at potential positive price momentum that should flow through to what you're actually trading and investing in, but you'll need to know the structural levels on those as well. It's not hard to find the structural levels. You can learn it through the CTKS method. One thing to note, gold is very economically and politically sensitive. Gold loves bad news. The more bad news, the more gold tends to shine. If you've got a war, gold loves it. If you've got a depression, recession, gold is just sparkling. But if you get good news, gold doesn't like that at all. And what happened here? The consumer confidence numbers came out stronger than anticipated. That major economic release caused gold to fold. But was it just that? We know a little bit better than that. We also know that gold was coming up to a very strong level of structural resistance, and we're talking structural resistance over more than 69,000 days, drawn up with the CTKS method. This is the output. These lines are called SLs or Stanfield levels, and they are the output of the CTKS method. When price comes up and challenges these strong structural levels, if it cannot keep above, it's going to the levels below. If it can't hold on to them, it's going to the level below that until it hits significant structure, and then it will seek to slow down, reverse. And this is really important. When you look at these lines, they're like safety nets and ceilings. If we don't hold this 1986 level, and gold is currently 1984.58, we're going down to the 1973.20 level. We've got a bit of a negative fresh air gap here, and that's not good. That means that even though these multiple safety nets rebounded price, this is what this price action means. It may not hold onto it. But just remember, price is always moving in a wave. We've got a negative downward trend at the moment. That's creating a probability we'll hit this 1973 level. Now that we have a bit of an understanding where the main markets are going, it's good to go back and have a look at Bitcoin. The first thing to understand, in order to get the structural support and resistance levels, we need to look across all of price history, not just a little snippet, which is like 1% of price history. We look for statistically significant price resistance and support. All the indicators that people put on their charts are statistical indicators. So the CTKS method is the world's most powerful smart money buy and sell level detection system because it analyzes all of price history, but it does so in an incredibly inventive way. When we pop on the indicator, which is just the markup of the CTKS method, we can see that Bitcoin, which is currently trading at 34,556, has a smart money structural buy area at 34,434. This particular area has been very, very important. It's held price as a safety net, which is good because the price below is 33,793. That is the structural level below, and you can see it's quite light. The area above structurally is that 34,710 mark. We can see that we've tried to get above that 34,710 and have not succeeded, but we're starting to see positive momentum inside the market, especially as the S&P 500 and the NASDAQ start to repair. More and more people will come back into the market and seek to put their money back in. People have been really scared of the markets, and that's because the mainstream media news will tell you the Great Depression is coming, flee, run, hide under your bed. Why? Because it drives eyeballs to their sites. We're much more interested in threats as opposed to positivity when it comes to the human race. We're geared for survival, and financial survival is pretty damn important if you think about it. So reading these negative news headlines, yeah, it can really freak you out, and it can cause fear to take over your investing and trading decisions. We don't do that in this community. We let the levels that we know come from analyzing all of price structure, we let them guide our price decisions. So far, we would expect positive momentum to flow through to the crypto market with increased optimism and people returning to the market. I've been talking about the structural levels in Solana for a while now. They're really quite important to understand. Solana has fewer and fewer structural resistance levels above it, and we're talking about structural resistances drawn from CTKS structure over 1100 days worth. That means they're strong. That means we know the structure. We're not guessing where support and resistance levels are. We know where they are. Solana has been making this upward momentum trajectory, and when we pop on the monthly service indicator, what we can see is that there's a structural resistance level at $37. We had a fresh air gap from this particular level up on that 33.75. That fresh air gap came up and it's now starting to challenge that $37 level. But if we go higher, there's fewer and fewer structural resistance levels on Solana. Let's get above that 37, and that would be fantastic. Now, we always have to understand that price is always moving in a wave. It can come down and do something really interesting. It can pull the shorts in and then liquidate them and push them up. Typically, you see big candles when that happens. That's shorts getting liquidated. And when they're big candles, red candles down, that's the longs getting liquidated. If you're shorting Solana, please be aware that it's very strong structurally at the current time. Yesterday, we were looking at XRP around this level, and I mentioned we could get a bit of a fake out before things turn positive. Now, to look at what's happening up here, we need to analyze nearly 4,000 days worth of data. And what do we see? Multiple resistance levels. These are structural resistance levels. These are not retail resistance levels. These are not drawn through a concept of, I'll just pick 2 points. These are drawn through a standards-based process, and we can see so many structural resistance levels up around that 62.58 mark and below. The longs certainly did try to get through there, but that was always going to be tough because there's so many structural resistance levels. When they band together, they push price down when they're above price. But when they're banded together below price, well, that's really good for price. That acts as a springboard to reverse price. This is why you must know where the structural levels are. And if we look at XRP at the current time, it's below that 6002 level. Wow, I have fun with that. It's currently at 59.81. If we can't get above this 60 level, we're heading back towards the 57.71 level. But there's a couple of structural levels of support, and that's held up quite well. If we go further down, we would expect 56.78. It's going to take a bit of time for XRP to get through these levels, so please be aware of that. But with positive momentum inside Bitcoin, XRP will gain its strength from Bitcoin's price momentum. This is another thing to be aware of. There are so many rules inside the crypto market. I'm just going to overlay Bitcoin's gravity on XRP's chart. You can see as Bitcoin went positive, XR went positive as well, but managed to follow through. But then as Bitcoin came down, no alt can resist Bitcoin's gravity. That rule pushed XRP's price down. Bitcoin, that blue line, was coming up. XRP took a little bit of time. It had a lag impact. And look at this liquidation here, because there was a fresh air gap. The shorts were expecting that they could control price and push it down. They were wrong, because they were doing it according to recent indicative price, not 3,700 plus days worth of structural resistance and support analysis. That's why we saw this big spike up. But of course, when you get massive resistance levels, they're going to push price down because the sellers are hanging out there. They're waiting for it. Look at Bitcoin's price now. It's starting to go up. This positive momentum will slingshot XRP's price up through this potential resistance if we get follow through, especially as a lot of shorts have been piling back into XRP. Market movements can look really random, but actually price charts are just simply moving between structural zones all the time, structural buy zones and structural sell zones. We know the NASDAQ has cleared quite a few resistance levels, structural resistance levels. We know the S&P 500 is getting close to breaking out of those structural levels, and the NASDAQ gives us an indication that that could be on the cards. We need to always look at what is happening inside the market. You need to understand these different charts. Critically important, understand the structural levels. If you're liking the content so far, please smash that like button and don't forget to subscribe. And please be aware, there's a lot of scammers out there. Just protect yourself. Always prepare yourself for the concept that price always moves in a wave. In an uptrend, price is going up and then coming down, going up, coming down, going up, coming down. But the trend is positive. In a downtrend, you can see price coming up, going down, coming up, going down. So don't worry about the red and green. Understand the CTKS structure. That is your key to success. Keeping positive is really, really important. If you don't keep positive, the market will just make your fear be in control of your buying and selling decisions. When you act on fear, you create the fear that you were trying to avoid. In less than 21 hours, the FOMC hangs together and decides the fate of the federal funds rate. Ooh, I'm a poet and I didn't even know it. The concept is there's a 0% probability being factored into the market at the current time of a rate increase, and the ease percentage is increasing, but it's so tiny that just the Fed is most likely to keep rates on hold. Keep your eye on those economic indicators. Just pop across to CTKS News and Market Analysis. You'll see all the key data points here. And this is good to keep an eye on because consumer confidence did come in higher than anticipated. We've got a lot of different things coming out. The markets could get quite volatile over the next couple of days. But if you're prepared and you know the CTKS structure, you'll have no issues at all. You can take advantage of the volatility, and that's what it's all about. The thing that scammers do, they impersonate all YouTubers, Twitter people, Instagram people. It doesn't matter who they are. They impersonate them And what do? They say, I'll do it for you. If somebody comes up and says, I'll do it for you, just run. You need to learn. Your learning is your earning. These are the only things that I'm involved with. And one thing that I focus on is your learning. You must learn what to do. If you don't know what you're doing, you will fail. It doesn't matter what area of life it is. If you don't know what you're doing, you are not going to be successful. A lot of people say, oh Ken, I'm so time poor. I need to go fast. If you go fast, you'll actually go in reverse. You need to go slow to go fast. This takes a lot of time to learn, but it's a very vital rule. Take the timing pressure off yourself. Understand that life is a marathon and not a sprint. A lot of people get into financial markets. They get sucked in by scammers promising 0% loss and 100x return. That is just nuts. If you get 100x return, you can also lose everything. There is no return without risk. 0% risk means 0% return. And when it comes to scammers, they'll just take your money. There's no such thing as a free lunch. You have to put the time in. I've been inside financial markets for nearly 4 decades. You must put in the hard work if you want to be successful. But it's the same with everything in life. If you turn up to your job and you just laze around, take really long lunches, you're going to get yourself fired. If you go to a job and you don't know what you're doing and you ask everybody else, hey, what's the answer to this? You're going to get fired as well. Don't think that new rules apply to financial markets. It's exactly the same rule as applies to life. Learning first, earning second. That's exactly why we have an education system. So therefore, being dedicated and committed is critically important. You'll find that you either win or learn. Never blaming is really important as well. If you blame, you disempower yourself. You put the cause of the problem outside yourself, and then the way to fix that problem is also outside yourself. You must bring it inside yourself. You do that through learning. You can and will succeed. The concept is put the time in. Don't worry about shortcutting things. Your path to success, life is a marathon. If you do shortcuts, you'll cut yourself. Always solve your problems with integrity and decency through positive excellence. Know that opportunities in life reset daily. It doesn't matter what happened yesterday. Today is a brand new day. Any life pullback that you get will give you the strength for the next life rally. It's just life teaching you a rule of life. If you learn the rule, you will do really, really well. And if you don't do it, if you don't learn the rule, you'll get the rule again at a higher level of pain. It's a really good idea to learn life's rules. And just understand that the universe wants you to succeed. This entire system is set up to make you succeed. A lot of people don't believe this, but it's absolutely true. But you have to put in the work. A lot of people say, what is the difference between a success and a failure? Successful people simply do what the unsuccessful people will not do. What is that? They put in the work. They turn up each and every day. They're dedicated and committed. They win or learn and never blame. They start small and scale. They go slow to go fast. They have reasonable expectations. They understand how the system works, and they know they can succeed. You're literally one habit away from life change and positive life-changing wealth. You can do it. You've got this, but put in the work. The rich are not lazy. There's so many Hollywood versions of the rich just lazing around on pools or in pools. That's just absolute rubbish. Wealthy people are the hardest working people that you will ever meet.